Morning, Steve Free in Chicago with the morning grain news. So overnight grain prices were sharply lower. There really wasn't a good reason for this except the technical selling below support, maybe some margin call, liquidation, and also the fact that many of the bulls that were looking for lower U.S. crops, higher U.S. export demand, especially in corn and beans, kind of giving up on that. So either one or two things are going to happen. Market could continue to slip lower, trying to find a price that will stimulate demand, or that we could see some kind of supply shock rally after July 4th if the U.S. Midwest weather is drier and warmer than normal. I think the two big headlines overnight was the Fed chairman's comments about being tough to have a soft landing in the economy and that there's a high risk for recession. That's offering some weakness into the energy market, most commodity markets, and in the grains, especially if you see consumer disposable income coming down and they have to make tough decisions on what they spend their money on. In the UK, you're hearing of rationing of a certain amount of money for food every week and not really filling up cars as much as they normally do. Germany is in a second stage of a three-stage alert about lower energy supplies and higher prices. All of this is somewhat due to the continued Ukraine war. Inflation was high before the war, but the fact that Ukraine's not exporting grain and Russia's not exporting energy is increasing risk in those areas. As far as the weather is concerned in the U.S., again, we're seeing a more normal type dry pattern, but normal temps. So the crop is holding on. And when we look at the 8 to 14 day map, they came out with rains across much of the western Midwest. Right now, the driest parts of the Midwest is eastern Illinois and east into Indiana and Ohio, and maybe south into parts of the Delta. The forecast suggests that these areas might see a break and some shower activity over the weekend, not enough to replenish topsoils, and that long term you might see some ridge returning into the western Corn Belt, although this morning's American model has the ridge from the Delta up into Minnesota and Wisconsin, including Illinois. So I think the market is overreacting right now to demand concerns, but I can't fight the sell-off, and I think values are undervalued, and we'll have to see just what the crop size and potential increase in demand can spark a bounce off these weak price levels. As always, these are my thoughts, not those of ADM and ADM IS. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.